go ahead and open this up. Here, I could basically see where interest rates have been, not just this week, but tracking back week after week after week. See, Mortgage News Daily here has charts, as you can see here on my computer, as far as what the interest rates have been, not only this year, right here, but also the last 5 years, taking into account the data, and then maximum of 10 years plus data. As you can see here, the flow of interest rates going up or down depending on the time that we have here. What are the times, right? So as far as this week is concerned, let me zoom into the 1 year mark. You can see here from the beginning of the year here, we have June, about 12 months ago here, all the way to where we are now. You don't see much change as far as 3% and then all the way to 7% range. We ended the week here, according to Mortgage News Daily, at 6.9%. That is the 30-year fixed rate conventional, 20% down type of loan. Obviously, those will vary depending on your situation, your specific credit file. So these numbers don't reflect every single scenario. There's also discount points you can purchase to adjust this rate. There's also other options that I will cover as well in this video, so that way you are perfectly informed about what your options are moving forward. Are you going to be we're going to talk about this. What kind of buyer are you going to be? Are you going to be A, B, C, D buyer? And I will explain to you what that is just shortly more in this video. So I do invite you to stick along and watch that as we go. But yeah, currently this week, the interest rates dipped. Some we got here 7.9 as opposed to 7.14. Now it doesn't change much. It's not a drastic movement. There's not an exodus of buyers now entering the market. Most, by and large, buyers have been leaving the market, or at least staying by the sidelines, as we can see here. It's kind of like if you can imagine a pool, right? I mean, right now it's summertime, Memorial Day has passed, and now people are flocking to the pools, flocking to the beaches, right? And rightly so. I myself am getting ready to go into the pool and just jump in, even with this nice little, shirt that I have on. Why not, right? But listen, I mean, a lot of folks like to wade in the water of 3-foot deep water, right? They can just splash in there, especially to the kids. But as you get deeper into the pool, the 4-5 foot level of water, that decreases the amount of folks swimming in there, because some are short and they don't know how to swim, and others just don't like feeling like they're overwhelmed with water. Then you get to the 6-foot water, the 7-foot deep water, and you see many less folks in that range because not a lot of people know how to swim. So those that don't know how to swim, or not savvy with the water, will stay away from the 6-foot, 7-foot range, 8-foot range. So if you liken that to the interest rates that we currently have, you'll see that 6.9, 7.1 type of interest rates are going to keep a lot of buyers away from the waters right now. They're not playing in that water. Right now, the water is 6-7 foot deep. And so that's the state of the mortgage rates. And only those I see that are more serious about purchasing property, that is, those that are currently looking to make a move anytime soon, are about getting that work done, right? They're out in the market, they're putting in offers and being competitive. Now that doesn't mean that it's not like one of those old town folks, those movies, right, in the Wild Wild West where there's just a tumbleweed going through and there's nobody inside and there's only 1 or 2 gunslingers out there, right? It's not like that. I mean, I've been out in the market, I've been out in the fields, and I have seen a lot of competition anyway. So it actually scares me to think that if rates were to drop to, let's say, 6% or 5%, how much more busy it would be. So that's the thing that is concerning to me. If rates were to drop at that level, we would have a plethora of buyers out in the markets, and we would see only limited inventory. So things could get really crazy if interest rates drop to about 5%, even 4%. Now that's almost laughable right now. I say 5%, 4%, because it seems that those numbers are not really going to be happening anytime soon. And buyers are starting to get that understanding as well. They're starting to understand, hey, rates are going to be at 6-7% for the time being. And so, again, that makes folks not want to get into the market. The only question is, how long can they tolerate to not purchase a home, to be renting? Because even rental rates have been uncomfortably high for some time, and it doesn't look like it's going to be decreasing, because as a market, supply and demand, that always plays a factor into things. And, at the end of the month, you are still going to be paying someone's mortgage. Is it going to be yours, or is it going to be your landlord's, right? So that's always a question there about renting versus buying. if you are going to be staying in a place, in a town for an extended period of time, 5, 10 plus years, then it behooves you to then, go ahead and just purchase a home and start to build, equity in a property that is under your name, right? So that way you can at least go there. So if you are interested in making that move, obviously, especially if you are, wanting to move forward and not pay someone else's mortgage, reach out to me and I will get you connected with a real estate agent out wherever you are. But if you're in the Chicagoland area, for sure reach out to me, as I am licensed in the state of Illinois to, broker some real estate deals. In fact, all of them here, residential wise. So anyway, the interest rates have been at 6.9 for this week. So that's, good news for some and, scary news for others. But whatever the case is, even if you are on the sidelines and you are not making any moves, as a matter of fact, even today I do have an appointment to speak with a family regarding the state of the buyer's market at the moment, and I will have a conversation with them, and I will try to understand their situation and what kind of home they're looking to buy. But they are primarily looking to wait out the market until rates become more favorable. But that doesn't mean that I'm not going to be interested in what they have to do, right? Of course, as a real estate agent, I care about their plans, right? Their plans of purchasing a home becomes my plans for them to purchase a home. That's how it is with every single client that I have. Any great real estate broker wants to make sure that their clients are taken care of, and if they want to wait some time, I will be there for them, waiting for them to come to terms, at least come to the point where they make a purchase. I can't tell you how many folks I have in my database that I already have, waiting a year or two, and even past years, they've told me they wanted to wait. I then reached out to them when the time was right, and they were ready to make a move at that time. So it always comes, I'm about playing the long-term game with you here. I'm not going anywhere. I'm not going to be, moving around. And, this is one of the things, and this is just a sidetrack here, but this is what happens sometimes, is that sometimes brokers are not patient enough with folks and they just move on and forget. Well, I don't forget. And I do want to stay here and make sure that you are getting your goals set. And yeah, I have that information that you gave me in the database, and I will not forget you. Okay, so anyway, that's what the state of interest rates look like, and the sentiment of buyers right now is that, they're just, most of them are staying away from that. And like I said, I've seen the sweet spot. It's around the 5% range where folks start coming out in droves, and that is exactly what we see going on here. So you can see. And as a matter of fact, let me give you this idea here as well. I was also looking around, perusing through this website, and I was looking at how refinancing looks like. As a real estate agent, I want to make sure, I'm curious about, what the state of affairs is. Where are people, spending their time, spending their money, what they are doing, the sentiment, right, their behavior. And I'm looking here at the 5-year. This is a refinancing index, right? Just, quickly, I wanted to just show you this. I thought it was interesting, so I wanted to share this with you. The orange line here represents the interest rates, right, during this time. So, and the blue background here, this blue, as you can see my mouse hovering, that's the refinancing that took place. So as you can see, when rates started dropping around 3.7, 3.5 or so, 3.6, that was in 2020, at the onset of the pandemic. And then we see here interest refinancing, I should say, was skyrocketing because people saw the advantage that they probably had. Interest rates, around here, it was 4.5, and if I go back even further, it peaked around 4.8. So people were refinancing at a better rate, 2.6. So of course, it makes sense for folks to refinance when the interest rates was very low. And as you can see, when they started to increase, you can see then the refinancing start to decrease just as much. So you follow my mouse here, you can see the activity. So that was just interesting to me, and it makes sense, obviously, for refinancing. That is when you purchase a home and then you want to get basically a brand new mortgage, right, with better terms, better interest rates, and that's what you do here. So I will touch base on that just shortly to give you an idea and make you a more savvy buyer. Moving forward, I'll give you that information currently. Okay. This here is, again, the 30-year fixed rate. You can see that in the orange line. This is the 10-year. Let me kind of zoom in a little bit to the 5-year. This also is interesting to me because it shows me the purchase index according to the Mortgage Brokers Association. Here we go, Mortgage Bankers Association. MBA has put out these numbers here according to this. And the purchase index basically, it doesn't mean the home's purchased. It basically means applications put in. And you can see here how many folks have been looking to purchase a property and apply for a home. And yeah, this is a 5-year mark now. The 1-year mark, you can see here that the index has been kind of low relative to, as you can see here, the 10-year. If you could zoom out, right, and see, if you could just focus on the blue lines in the background, the purchase index has been around the 5% mark, right? But as of late, see the pandemic right here, if you go, it's hovering around 6% or so. In the background, the purchase index, that is again the applications of folks and interests. It basically shows you the interest of folks to buy homes. Well, that has decreased dramatically ever since, again, rates have been starting to tick up. And that tick up, the 30-year fixed rate, has started to tick up ever since around December 2021. Currently, we're in June 2023, right? So that was already about a year and a half ago when rates started to tick up. The valley, the deepest part, was around that time, and then around January 3rd, 2022, we started seeing rates tick up, and it's been going up ever since, right? Where it peaked already. Let's see here. It peaked. Let me see if my mouse can go here. On November 7th, 2022. That's when mortgage rates hit a high 7.08, and not even counting last week's at 7.14. So we're seeing basically highs that we haven't seen even in the last 10 years. If you kind of zoom out to see the maximum, right here is a really good example of where we are. And I really am happy that I was able to bring up this max number here, because mortgage interest rates have been tracked for a very long time, right? As far back as 1971. Here, the data according to the Mortgage News Daily. I mean, mortgage applications haven't even been tracked until way back in 1991. Well, you go back to the interest rates, you see here very clearly that today's interest rates compared to historical interest rates are not even, close to where they are. So people were buying homes back in the day that at 17% interest rates. That's a peak that happened, right around 1980, 1981. Folks were still buying homes, and that was, normal. That was acceptable. That was not a shock and awe. It was something that was done. And then around the 85, let's see here, the 90s, we see rates at 9%, and then we started to see decline here. But look, even in the year 2000, June 5th, 2000, exactly 23 years ago from today, tomorrow, interest rates were at 8.3, okay? And now we are sitting at 6.9%. So that's just interesting information for you to look at, to consider. And that's the state of affairs when it comes to the real estate interest rates here. That's what's keeping buyers at bay. And look, this data is going way back, and so folks that are buying homes today, the millennials, I'm a millennial as well. We haven't been alive that long and even awakened to the idea of mortgage rates and all of this for some time, right? We haven't been used to this. All we've been used to ever since we kind of awoke, right, to interest rates and have been aware of interest rates, that we've only been used to, rates being around 5 or 6 or even 3%. And now that it's 6%, it feels like a shock and awe. But to those who have been around for some time, right, those folks understand that way back in the day, interest rates were at 8%, 12%, and those who were in the market in the 80s purchasing homes, they will recall that interest rates have been around for around 17%. So 6% to them is just a yawn, just nothing. It's like, okay, whatever, 6%. But I get it. Inflation and rising home prices, that is a factor that people are, concerned about. And yeah, of course, prices have been elevated, not elevated in a weird way. It's not crazy, but I will show you some reports here shortly about home prices and why they are where they are, and if we see any indication that they have ballooned out of proportion and then they're going to just crash. And we just don't see that happening, because we have seen prices of homes gradually increase and stay that way, despite the pandemic and other things that we have seen, and even the aftermath and the recovery. The prices have still remained high, and that's because they've been supported by the buyer demand. And like I said before, buyer demand is here to stay. I don't see it going anywhere. And in fact, I see a lot of potential out here. Like, here's another analogy you could use, right? I don't know if you noticed this, and if you studied wasps, bees, things like that, you notice that in the wintertime, they're not anywhere, right? They're not to be seen anywhere, right? And even in the springtime, in the early morning hours when the temperature is around 40 degrees, 30 degrees, whatever the case is, where are the bees at? But later in the afternoon, they show up. Why is that? Well, the study has been done about bees and temperature. I mean, I'm not going to go into details about it, but after I think 55 degrees or so, bees wake up and then they start to fly around, right? So in the same way, I mean, look, when the temperature is 50 degrees, 40 degrees, all the wasps in that area are just sleeping. Once the temperature hits a certain degree, they start to wake up and start to become a pest again, let's just say. So in the same way, okay, they're not pests here at all, but I'm saying when the temperature is right, when the interest rates are at a sweet spot, that'll awaken many buyers into the market, and you'll start to see way more populated, open houses, homes being toured way more frequently. Okay, so in just in a little while, I'm going to start to get into the details of what's happening here with showing us we have new data now for the month coming up, and I will show you exactly what's going on here in the Chicagoland market as far as the monthly numbers go. But yeah, basically that's what has been happening now. Let me switch gears and talk about how you can become a more savvy buyer in today's market. Let's say that you will weather the storm, right? It's storming outside, most folks are staying inside, but there are just a lot of other brave souls out there that need to get stuff done outside, and so they will go out and venture out into the storm, you could say. Well, those that are going out to venture into the storm, I want to make sure that you yourself are well equipped to be a driving force as far as a buyer making offers go. In other words, I want to equip you so that you are a savvy buyer. See, a lot of times, folks, when they want to buy a home, yeah, they could look up homes on Zillow and other websites. Of course, they could do that. They could see the information out there, and they'll just click on the first agent they see there, or they just, even go to the open house and try to put in an offer with the listing agent. And I'm going to tell you that that will be a mistake for you to do. You want to make sure that you are finding yourself a competent, active, understanding, studious, and compassionate realtor who's going to be able to be there for you whenever the time gets rough. And of course, real estate, knowing me with the experience that I have, understand that real estate is an emotional transaction, and there's a lot of money involved, and you want to make sure that the person you are working with is, of course, on top of their game and taking this very seriously, but at the same time understanding the nature of the emotion that is involved. Anyway, so I want to make sure that you are a savvy buyer. Now, those that are out in the market, they could just put out offers and that's that. But are you aware of all of the options available? I mean, are you acting like it's a buyer's market? That's another thing. You say, what's that? Buyer's market, seller's market. I'm not going to go into detail about that, but you got to understand that, hey, are we dealing with a buyer's market? I mean, it's a temperature thing, right? I mean, for example, not being aware of whether or not it's a buyer's or seller's market is the equivalent of you not being aware of the weather outside. So you go dressed in your bikini, right? And then you open the door and you walk outside and it's a blizzard out there. Are you going to be prepared for the elements? Well, of course not. The same way, in the buyer's market, of course, you could definitely barter and try to get some concessions from the seller. But if it's a seller's market and there are multiple offers being offered and you're not aware of that, you could probably be making a very, very poor offer when not aware of the times, being tone deaf to the market and ask for things, and obviously your offer is going to look like a fool in a sense, right? Because you're asking for things as if it's a buyer's market and not being understanding. That's why having the right realtor showing you the ropes and understanding the times, and having the realtor understand what's happening in the news and aware of the charts and everything else, wink wink, is able to show you what is the best offer out there. Okay, so this is my idea of making sure that you are not just an average buyer, but a savvy buyer, I want to say. I'm not going to use any other terms. So what are folks doing right now? Well, listen, I mean, a strategy is needed right here, right? Teams, basketball teams, right? When they are in the game, they make strategies happen. If they see they're getting their butts whooped, right? They're losing games by a large margin of points. They want to make sure that, hey, they adjust their strategy so that they can compete and possibly win the game. It wouldn't be a wise idea to just not make any adjustments and keep doing the same ineffective strategies. So you want to make sure that you have better strategies. So as a buyer, perhaps you've been struggling with getting your offer accepted. Are there any other options out there? Well, of course there are, right? There are 4 different types, right? Those that have been frustrated with not getting the offers accepted, maybe they are opting, and if they are able, right, and ready, and maybe even willing to put up offers of cash only offers. Well, that's another option that folks have been starting to do now. Perhaps they have had money in the bank and they were not willing to part with that money, and they try to find financing, but now because of the competition that exists, they are looking to go ahead and put in an all cash offer at the moment. And that always almost always gets the best offer out there. Of course, the most strongest offers are those that are cash buyers, unless for some reason the seller feels a certain way about a particular offer, being that perhaps they saw a love letter or there was some sort of escalation clause, and those, of course, reach out to me and I will give you some more information about that. I'm not going to go into that in detail here in this video, but listen, they become more savvy by offering all cash and not lowballing it. You still got to remain competitive. If a person is selling their home for, let's say, $300,000, and the financing is at 315, let's say the offer is, and you come in with a cash offer of 280, 270, you say, well, that's all cash. Yeah, but in the moment, some people wouldn't mind waiting 30 to 45 days for that financing to clear, and then they would get 15K above. So what I'm saying to you is that if you are a cash buyer, it behooves you to perhaps be more competitive with your offer. And the situation sometimes is that sellers are not willing to show their cards, right? It's a negotiation. It's a tactic, right? They don't want to show you what the highest offer is. And why would you, right? If you are, I've been in the listing side of transactions as well. And I know that, hey, not showing your cards is a benefit because the buyer, the person that's negotiating with you, thinks and is wondering, hey, maybe there are offers higher. So as a listing agent, I myself would want the best interest for my client. My fiduciary responsibility demands of me to help my buyer, my seller, bring in the most possible way. And obviously I'll get into more tactics about that. In fact, I will make a note of that, talking about tactics in negotiation, because I believe that is a very important tool for you to use. Okay, so that's an idea for a video for another day. But anyway, you don't want to show your card. So as a cash buyer, it behooves you at this moment, if it is a very competitive market and you really need to make a move, is to make your cash offer as successful and as high as possible. Okay, so anyway, that's just an idea there to be more savvy in the market, right, and be more aggressive. That's number one, right? There's four. Number one. Number two is those people that are choosing to hold and be waiting for the temperature to wake up, right, to become more aggressive. Now, the only thing with that is, okay, fine, you are going to get out of the market. That's understandable, right? So there's less folks buying homes, right? So these folks are going to compete for the homes. And even this right here, these folks that remain are still enough to be competitive and to make it a little bit uncomfortable for, the other bidders, right? Because there is so much demand still. And then once the temperature is more agreeable, then they will flood the market and it'll become just a huge mess. And I don't know, we'll see bid wars spiral out of control, maybe. And then we'll see home prices what? Tick down? No, tick up higher. You see, and this is what the demand is. So because of the demand and how it is, and people holding and going back, that's one of the tactics they use here. I'm telling you, man, the prices, I don't see them coming down anytime soon because of the demand and what's going on out there. And we need some more new housing, by the way. But that's a topic for another day. So that's number two, right? Number one was all cash offers. Number two are those people whose tactic is to just wait until terms of, they're looking to buy, right? They've been pre-approved. They're watching their credit. They're continuing to save their income, right? So that they can produce a down payment that is substantial and competitive. That's a tactic they're using. But now the more savvy buyers of today's market that are not leaving the market, right, that they are still competing, well, they become more savvy, right? They're working with a realtor who understands the different loan products out there. They're working with lenders that provide these things. So there's two high impact strategies that you can start using right now, right? Let me get into that real quick. Now, I'm not a lender, right? But I am a real estate agent and I'm aware of what the products are. And I want to kind of educate you on what the other options are here. Now, I'm not going to go into detail about this. Obviously, speak with your lender. I have one that I prefer to use. I have one that I know, like, and trust that you can reach out to me and I could get you connected with them, right? And they'll explain everything. And I've handpicked, my folks that I can work with that I believe can better serve the public and my clients, because I want to make sure that my clients are taken care of in the best way possible. I've seen lenders high and low. Some are some are jerks. Some are people that are very impatient. Some don't get back to you. And then I've seen those lenders that are more loan officers that are more patient, that teach and actually are concerned, and they actually return calls, right? And are not rude, right? So I know those folks. If you are interested in working with folks like that, reach out to me because I will connect you and make sure that you get the best possible treatment as well. Okay, so anyway, this is number 3. Those folks that are looking for homes use a strategy of a 2-1 buy down. Now, what is that? What is this 2-1 buy down strategy? Well, I wanted to bring this up here. I have here according to Housing Wire, I wanted to kind of show you a graphic or some text that I have here. What is a 2-1 temporary rate buy down? Well, let me just read this to you, yeah? Because I already did the research. I highlighted some things that I wanted you to know. Now, if you're listening to this, just keep on working, keep on enjoying your day, keep on having your eyes on the road if you're listening to this. But let me kind of read this to you, especially for those who are just listening to this. Okay, mortgage rates are 7% above, right? They're competitive, they're high. So what are other options? Is there a way to buy down a rate? Is it a way to bring the 6.9% interest rate of this week down to, I don't know, a little bit? It says 6.8, 6.5. Is there any way to move that number? I mean, the Fed is raising interest rates to curb inflation. Inflation is causing all of this, interest rates to be varied and other factors as well. Those are external. But is there anything you can do? Anything that you can do, you could choose, right, to bring that rate down? Well, yes, there are. There are ways. Obviously, having good credit always helps. If you have poor credit, no. Yes, you will move the interest rate, but in a way that you don't want it to go. It's going to go higher and more difficult, right? But if you have taken care of your credit, you have good credit, these rates that we see, that we talk about, are those rates that are available to you. Now, a 2-1 temporary rate buy down is basically buying down the rate. Let me read this to you. These borrowers, according to this one, this was written already, 6 months ago, 7 months ago. This is still relevant today, right? Because any time now, let me tell you this: the 2-1 temporary rate buy down is not a new product, but you know what? It rears its beautiful head. It rears its beautiful head every time interest rates get uncomfortably high and folks are trying to get back down to a more comfortable level. Okay, so these borrowers, it says here, are hoping that rates will decline enough in the next few years that a refinance will bring their payments down permanently. So this is a temporary rate buy down. The gist of it basically works like this. Let's say that today's rates, right, we see here are 6.9. Well, if you get a 2-1 buy down, basically the first year, right, so right now it's June 2023 all the way to June 2024, the rate will drop by 2%. So instead of 6.9, it'll be 4.9. Now, between June 2024 and June 2025, the rate will be 5.9. And then, after June 2025 and thereafter until the duration of the whole 30-year loan, right, the rest of that loan period will be the note rate. What is the note rate? The note rate is basically the interest rate of the day, right, whatever it's locked down at, okay? So that's what that would look like. But it's a temporary buy down, and it's for those folks that are savvy, right? We talked about the 4 types of buyers. 1 being those that are all cash. 2 being those that are holding until the right time. 3 are these people that are taking this rate that buy down. And the 4th one is those that will bite the bullet and take the rate as it is and just refinance a little bit later if they are able to afford the monthly payment, which, by the way, the monthly payment have hit highs of this week, $2,651 monthly payment. So those numbers have been up $350 per month as opposed to 1 year ago. So yes, those numbers have been up there as well. But anyway, those are the folks that are savvy. They take these loan products, or they have a strategy in place that they say, okay, you know what? I will go into my house. I will, take a look at my books, right? Am I able to afford this? And they look at their finances and they're like, you know what? I can't afford this monthly payment, at least for the next 5 years. Hoping that in the next 5 years, we will see rates drop to a more comfortable level, and then and then guess what? At that point, what they will do is that they will refinance, right? We talked about refinancing already. So let me give a little bit more detail about rate buy downs. Generally speaking, a buy down is a real estate financing technique that makes it easier for a borrower to qualify for a mortgage with a lower interest rate. That lower rate can last for the duration of the mortgage or for a particular period of time. All right? So a buy down is an agreement that provides for a low interest rate for the first year of the loan, like we spoke about, a somewhat higher rate for the second year, and a full rate for the third year and beyond, right? Buzz Lightyear, to infinity and beyond. Well, the first, starting the third year until the third year. So if it's the third year, then you'll have 3 years of lower interest and then 27 years of the standard rate that you have, the full rate. So it'll be, in this case, 6.9 for the rest of that. So hoping though that in year 5, let's say, you will have the entire, time to refinance. Hopefully by that time, even if rates are lower than 6.9 in year 5, right? I mean, right now it's 2023. So in June of 2028, maybe the rates are lower, right? And we shall see. Even just buying it down a little bit will be a good rate to work with, okay? And see some of the pros and cons. I mean, just thinking about it, obviously, the pros is that right now in the short term, the first 3 years, you do have a decreased amount interest rate, thus making your monthly payment work out, right? And look, the other thing is that there are what's called discount points. Discount points is basically extra money you pay for the. Now this is optional; it's not a requirement. But if you choose to pay extra up front when you are purchasing a home, discount points is where you want to basically do your business in, right? Purchase points. Points again are just discounts that you give yourself, and you basically pay it off through the mortgage. Now, what is a mortgage discount point? Again, it's a fee that you pay to reduce your mortgage interest rate and monthly payment. Okay, so I did some highlights here. By the way, if you're interested in finding out how I did my highlights here with the in the browser, which is a cool little tactic that I have here, let me know. I'll reach out and give you an idea of how I did this. But anyway, what are mortgage discount points? Again, they're fees you pay a lender. It's basically called buying down the rates, and whatever the home price is, paying basically 1% of the purchase price of the home. So if a home costs $300,000, well, then 1% of that is $3,000. Okay, and then that point you will pay that up front, and then that'll decrease it, based on it. So here it is. The question is asked: how much does one mortgage point reduce my rate? That's a good question to ask. When you buy one discount point, you'll pay a fee of 1% of the mortgage amount. As a result, the lender typically cuts. Now, it's not an exact number that this is, 1% is not going to reduce it by 0.25. It might, yes, and it might not. So it's best for you to get in touch with a local lender. Obviously, I have someone I could recommend as well if you reach out to me. But anyway, that is what it will look like. Now, it doesn't have to be exactly 1%. You could pay more. You could probably pay a half a point according to this, or half or quarter point, and then it'll adjust the rate by a certain amount as well, okay? Now, this is how it'll look like on a monthly scale, right? Let's say that you do have, if you could look at the chart here, according to nerdwallet.com, if you don't purchase any points and you buy a property at 5% interest rates, how much is that point going to cost you? Well, $0, because you didn't purchase anything. So the principal and interest is $1,073 for that, not including taxes and insurance. Those are also added onto the monthly mortgage payment. This is just principal and interest, right? The house cost plus the interest. And what's interest? Basically, it's a rent for the money that you are borrowing. Anyway, discount point. Let's say you bought 1 point, right? 1 point on a $200,000 house. Up front, it costs you $2,000, right? Because that's 1% of $200,000. It's $2,000. You pay that. It's included in your paperwork and your costs, your closing costs. It's included there. So when you show up to closing, you bring your ID, and then you bring a checkbook, right? And then you write how much, and your realtor will let you know how much you would need to bring to close at that point, right? So you can write that certified check from the bank, and that'll be included with the transaction. And so, therefore, instead of paying $1,073.64, according to this example, you'll be paying $1,043.29. So basically, you'll be saving, roughly $30 a month, every single month, for the first 66 months. So basically, 5 years and a half, roughly around that much, okay? So if you buy one discount point, that means, you fork up $2,000 in the beginning of the loan, right? And you're saving $30 a month. So for some people, that matters, right? Saving $30 a month in 1 year, that's over $360 a year. You could put it into a piggy bank. And basically what it's saying here is that in 5.5 years, you will be able to receive all that money right back. In 5.5 years, the $2,000 you spent will be returned to you, okay? And now the rest of the term of the mortgage, right, will be, basically saving money every single year. So that makes sense, right, to purchase points. If you purchase 2 discount points, what is it that? The math is if it's 1%, or in this case 2 points is 2% of the purchase price. And in other words, for closing, you bring in an extra $4,000, pay that at closing. That'll give you a discount of $60 a month, okay? And you'll break even in 67 months. You'll be saving $60, and then after that, you'll continue to save that amount of money, okay? So that's basically what it looks like. That's just a rough example of what the math will look like there. So yeah, I mean, this is just what it looks like here when it comes to the interest rates and all the news that we got going on here. So yeah, another week in housing, 6.9% is the interest rate. It dipped a little bit here, but that still is the same old news as it has been for the last several weeks, even months. Yes, we are seeing inventory come into the market, yes, but it doesn't mean that the inventory levels are increasing substantially enough for there to be a surge of homes, and thus bringing the prices perhaps down and starting to, just change the entire outlook of things. Is not. Things are still remaining the same as they were. Even now in the summer months, homes are going very quickly. In my experience here in the real estate market, usually homes, when they're priced right and they're moving quickly, yeah, they move within the first 10 to 15 days. I see homes getting off the market, okay? So it's important for you in this time and date, to work with a realtor that is diligent and knows what to do and is aggressive enough, yes, to take action and be able to write offers quickly, make the calls to the realtors, the listing agents, and just continue to be competitive, right? And to build relationships with realtors. So if you are in the market for a home, obviously of course, subscribe to the channel. I'll keep updating you, not just on the local news here in Chicagoland area, but also in the national news, whatever we see. I do the research for you so that you don't have to scour through all of these sites, and I'll be able to basically extract all of the important information out of these, and I'll provide colorful examples for you to understand. Just like today, I talked about the swimming pool. I talked about the wasps, right? I talked about these examples to give you an idea of what is happening in the market and give you some strategies on how to be a savvy buyer, and give you strategies and educate you about 2-1 buy downs, about how refinancing works. In today's meeting as well, did we not look at the numbers and the context of interest rates as opposed to the purchase index? And we taught you about purchase index and what does that mean. I taught you about discount points and what does that mean, right? So this channel is good for you to watch and learn about the real estate market, not just for those in the public looking to buy homes, but as well if you are an aspiring realtor looking to get your license in the future. Of course, come back to this channel, as I will continue to provide not only the news in a positive, optimistic light, obviously not skewing the facts, giving you the facts, but also giving you hope and positive feeling, I guess you could say, whatever the case is, and giving you ideas about and educating you about what the terminologies are in the real estate world. So with that said, thank you so much for watching this video. I will get into, and I will provide another video about the local market here in Chicago according to the local statistics that just came up here for the month of May. I'm excited about it. I'm a nerd when it comes to this kind of information. But yeah, if you like this content, for sure leave me a like and subscribe to the channel as I continue to provide more information for you. So with that said, thank you so much for watching this video, and until next time, I will see you.